Hey Matt, hey TCG team. Hope this finds you well. Hey, I'm very excited to share with you a analysis that I've done. As you may have remember, Matt challenged us to do some backtesting on the 4-hour charts, trading TCG structured approach. Um, so I'm quite keen to show you what I've discovered and to take this forward with you guys. We may have to collaborate, do some more back testing on this, but yeah, very promising looking results. So let's get into it. As you all know, we have our rules that determine structure, and we're going to use these structure breaks as the trigger to take a trade in the direction of the new structure. So first off here in the middle of December is where I went back to start. We get our first opportunity to trade short. The 101 pips here indicates the candle size, which we would use as the stop loss. And we would enter on close as strategy number one. Strategy number two would be to enter on a 10 pip pullback. Um, there is a few more strategies we can look at, but that's where we will need a bit more collaboration to test. Right. 131.7 pip maximum gain that you could have had. We will determine exit rules as well because, who's going to call the bottom. Um, then we had this little minor pullback here, which also shows us where we would flip bullish again. And it indeed gave us a 146.8 pip winner for a 43.6 pip risk based on the candle size. Now, I'm actually going to suggest that we use 60 pips as the stop loss at the minimum, but where the candle is bigger, we will then just adjust our risk and use the stop loss that that candle determines. So it's going to be minimum stop loss 60 or candle size if larger. Right, next trade up, we didn't flip bearish, so we got another bullish trade once we traded above that high there for 59.1 or the additional 10 pips if you waited for the pullback. 27.7 pip was the candle size, so again just a 60 pip stop loss. That then gives you basically a 1-to-1. Carrying on, again, structure didn't flip bearish. You get another opportunity once you break above that. And yeah, I gave you 98.9 for a 50.6. 98.9 plus 10 if you want. And so on and so on. So I think there was one trade where we would have had a loss and the rest would have been winners. So let's go and have a look at the spreadsheet that I've pulled together. Just scanning through. You'll get pictures of all these screenshots as well. Where's my Excel? Oh, closed. Okay, so going over the trades more from an analytical point of view, looking at the numbers. But let's just quickly look at the rules. So the rules is wait for a close that indicates a structure flip. If the signal candle closes weak, enter on close or at a 0.618 retrace of that candle. If the signal candle closes strong, enter on a close or minus 10 of close or a 23.8 fib retrace of that candle. The stop loss is 60 pips minimum or the size of the signal candle. If larger, just adjust your lot size. TP1 will be 50 pips, TP2 risk reward of 1.2, TP3 100 pips, and TP4 150 pips, risk reward 2. if you don't get to the whichever one you get to first. Okay. So focusing on trades where we entered on close. Um, Maximum drawdown from close, 12.5 pips, 9.4. There's one that was 57.6. All right. Um, and as you can see, you would comfortably have never been stopped out if you were using the 60 stop loss. Okay. Um, in this instance here, candle low to high. This is just to show us what the size of the candle is. Okay. And it sort of really indicates to us that the 60 would normally be good enough. But the thing is, we will then see what the actual real drawdown was. And in this instance, there's one that we would have gotten stopped out that. Now, if you were only ever using the candle, then there would be two more trades where you would have been stopped out at. But if you use the 60 stop loss, you would have been all right. Okay. Um, all right. So going through now for what we could have achieved, would the TP rules satisfy our trading? And as you can see, in all instances, we got at least 50 pips. All right. We got a risk reward of 1.2 as well. And where you didn't, at least your 50 would have taken you out of the trade. Then the 100 pips is achieved enough times as well. 1, 2, 3, 4, 5, 6 times. And 150 or a 2 also achieved there and there. And that one just missed that, but you get the 2.4. So yeah. So overall, I think I don't know how we'll do the exits, 50% every time or until you whittle it down to nothing, or you're going to go 80% and then a quarter of what's left. That, yeah, I think it feels a bit horrible to leave when you do 50%, 80%, sorry, at 50 pips. It would feel horrible actually if you see then the thing move down to 65. But okay, here's the other thing. We get one trade a week, roughly, because I've done it now, as you can see, from the middle of December to the end of February. That gives us what? No, it's middle of February. That gives us 8 weeks. I had 11 trades, and these last two were running concurrently, actually. So the other thing, uh, look at the candles that gives us the structure flips. It's either a 20, 100, or a 8 o'clock. So 8 p.m. in the evening or 8 a.m. in the morning on the MT4 time, which mine is UTC plus 2. So that's interesting. And then two more came at 1600 and one there at 0. So something to keep an eye on when we do more backtesting. But this is where I want to now pull the team together, and let's say we each get a month or a week to do, and we build out another year worth of backtesting on this. If we were to use the 10 per pullback as the entry, as you can see, you just slightly improve your results. The risk rewards go up a little bit. It's basically improves by about 10%. So nothing major, but I think what it will do for us is it will just reduce the amount of drawdown that we take, and that's the thing I think we should focus on more, given that we're going to be sitting in these trades for a long time. You don't want to sweat unnecessarily, and you would have only missed one trade. Okay. Had I used the combination rule of the minus 10, 23.8, and that there, I don't think you would have missed any trades. So, I hope you find this interesting and something worth to spend some of your idle time on while we wait for 30-minute trades to come, because they seem to be only coming 2 a week or so. So this would be a very nice additional trade strategy to have that plays out in the background. Cheers, guys.